Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes on Tuesday, the 12th of May. Starting off with Armadale Capital, where you can see the shares are in a bull flag just above recent resistance at 3 pence. The longer we stay above the 3 pence area, the greater the chance of a meeting with that line of resistance from August last year, heading up to 7 pence. Time frame the next month or so, and I suppose the stop loss at this stage around where the 50, 200 and 20-day moving averages are currently going into a golden cross around the 2.5 pence area, but ideally there's no breakback below the 3 pence area. Next stock is a request by many parties, very enthusiastic request as well from Alpha Growth. Previous target here was 1.8 pence. We've missed that on several occasions, but we still have the 200-day moving average rising. Support for the stock around the 1.37 pence area, which is where the 50-day moving average is, so that breaking 1.8, if we eventually do that, we should then hopefully head back up towards the main resistance area for the shares, which is up to 2.5 pence plus. But really, one wants to see that 1.8 pence broken before being confident that the stock will actually go up to the target there. But we are in a triangle there, and break of 1.8 should be quite bullish for the shares eventually. On to Octagonal, and stock which I've shied away from looking at over the recent past. You can see why. Very liquid and rather messy price action, but what you can glean from it is that little bear trap that we had below the 1 pence area in the latter part of March. That presumably got rid of the weak hands from the stock. We had bullish divergence after that in the RSI window, and view now is at end of day and a week close above the 200-day line and above 1.5 pence in particular should allow the shares to hit the top of that broadening triangle in place since March last year, as high as 3 pence. Stop loss on the bull argument, the technical bull argument at least, is the 50-day line at 1.21 pence. Spike higher today for Plutus Power Gen, a bit of a blast from the past there. You can see the way that the shares have very enthusiastically broken neckline resistance and that last March peak at 0.07 pence. While we're above that, looking for a target up to the top of that broadening triangle from November last year, as high as 0.2 pence and perhaps a bit more, so looking quite chirpy there. Any dips at the moment back towards 08, 09, something like that, regarded as a buying opportunity, but you don't want to see the shares go back below 0.07 pence. That would rather kill the recovery argument. Announcement today about Perez Investments. Here we've got shares breaking out of their recent consolidation after the spike we had last month up towards 4 pence. Gap higher today as well, which shows that some traders have been caught out. So basically end of day close and a week close above 5 pence could take the shares up to the top of this resistance line projection there, heading up towards the 9 pence area over the next month or so. At this stage, only back below 4 pence, really delaying the upside scenario there on a pretty clear breakout that we've had for the shares through 3 pence, which is post-2019 resistance. On to Powerhouse Energy, a stock which I've covered several times before. It's been quite a good charting candidate, especially good after yesterday's break of that line of resistance and the triangle that we've had since February at 1.2 pence. Above 1.2 pence, looking for not only a retest of 1.8 pence resistance from February, but on to as high as 2.2 pence, which is the top of that wide rising trend channel that I've drawn from February as well. RSI at 74, so quite overbought, but still a bit of gas in the tank. You can see that on previous spikes, shares went into the 80s and even the 90s on that particular oscillator, so looking quite chirpy there. Return of Tomco as well, a stock which I think I probably looked at in February when we had that full storm move to the upside through towards a penny and a half. We broke this line of resistance at the beginning of the month, came back to test it as support and also tested the 50-day line at 0.54 as support as well. Above that, or at least above the 0.5 pence area, looking for at least a retest of February resistance, heading towards that 200-day line, which is currently falling at 1.41 pence. Good news, I suppose, that the RSI bounced off neutral 50 and is still only at 62, so is gas in the tank for moves to the upside. See on Twitter that the views regarding tissue Regenix are slightly mixed at the moment, but I'm going for, as this is a Bulletin Board Heroes and we're normally on the bullish tack, I'm going for that particular approach at the moment, at least while we're above 1 pence, which was post-February resistance. That should now come in as a new support, and while we're above that, looking for at least 1.4 pence, and hopefully up to as high as 1.7, 1.8 pence at the 200-day line. And that's, as I said, valid while we hold above the 1 pence area. Ideally, the low of the day so far at 1.1 pence is held over the next few days, and we progress higher for those particular shares. Taken a long time for Extract Resources to push to the upside, but we did that yesterday, breaking that main 0.8 pence resistance with quite a solid green candle there. While we're above 0.8, maybe allowing down to the 50-day line at 0.7, looking for further progress. Ideally, there's a weekly close above the 200-day moving average at 0.99 pence, and that would give us a top of broadening triangle, November broadening triangle target up to 1.6 pence at the moment. As I said, the key there is that 0.7 to 0.8 pence is held in the interim. Flash in the pan stock for today has been Velocys, which has clearly disappointed people for many years, and obviously probably disappointed them after that fall that we had from 6 to 7 pence in February. The share's having another go here, and at least while we're above mid-April resistance at 3.4 pence, one would be looking for further upside, perhaps up to 5 pence in the over the next few weeks. We don't want to see the shares back below the 50-day line at 2.95 pence, because that would then smack of a repeat of the March failure for the shares. So 2.5 pence plus, we're in the bull tack. Above 3.4, we would be reasonably confident that the shares would remain higher and then push ahead after that. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.